What if I told you that right now, at this exact moment, one of the most reliable bottom signals in Bitcoin's entire history just triggered? Not a chart pattern, not a whale wallet, not some influencer's hot take. I'm talking about cold, hard Google search data, public data, data that has, twice before in Bitcoin's history, appeared right before massive price reversals. February 2026. Bitcoin is bleeding. It's sliding towards $60,000 after falling more than 50% from its all-time high in October. And across America, people are panicking. They're literally typing Bitcoin 0 into Google at a rate that has never ever been recorded before. All time record high. Now, here's where it gets interesting. Because the rest of the world, their fear already peaked back in August and has been cooling down ever since. So, either Americans know something the world doesn't, or this is exactly the kind of localized panic that has historically marked a bottom. I'm Kenzo, and welcome to Kenzo Finance, where we cut through the noise and go straight to the data. In this video, I'm breaking down the data, the history, the psychology, and what I actually think happens next. Stay until the end of this video, because what I'm going to show you there completely reframes how you should be reading this market right now. Let's get into it. The data. What is Google actually telling us? All right, let's start with the raw data, because before we draw any conclusions, we need to understand exactly what we're looking at. Google Trends is a free tool that tracks how often people search for a specific term over time. But here's the important part, and most people miss this. Google Trends does not give you raw search volume numbers. It doesn't tell you that 2 million people searched for something this week. Instead, it gives you a score from 0 to 100, where 100 represents the peak interest for that search term within the time period you selected. So a score of 100 doesn't mean a specific number of searches. It means that point in time had the highest relative interest compared to every other point in the same window. Keep that in mind. It's going to matter a lot later. Now, the term we're looking at is Bitcoin 0, as in people literally searching whether Bitcoin is going to zero. This isn't just casual curiosity. This is fear. This is retail investors, people who maybe bought Bitcoin for the first time in the last bull cycle, now watching their portfolios bleed and wondering if they made the biggest financial mistake of their lives. And in the United States, that search term just hit a score of 100 in February 2026. Let me repeat that. In the entire recorded history of Google Trends for this search term, all the crashes, all the bear markets, all the panic, the United States has never searched for Bitcoin 0 more than it is right now. That's a significant data point, and it lines up with what's happening on the ground. Bitcoin hit its all-time high somewhere above $100,000 in October 2025. Since then, it's fallen more than 50%. It's now hovering near $60,000, and sentiment is absolutely crushed. People are scared, and Google is proving it. But here's where the story gets more complicated, and honestly, more interesting. When you zoom out and look at the global Google Trends data for the same search term, you get a completely different picture. Worldwide, Bitcoin 0 searches actually peaked back in August 2025, scoring 100 globally at that point. And since then, they've been declining. By February 2026, the global score had dropped to around 38. And let that sink in. While American searches for Bitcoin going to zero are hitting all-time highs, the rest of the world's fear has already cooled by more than 60%. So we have a massive divergence. US retail investors are panicking at record levels, but globally, that panic is fading, not growing. Now, why might this be happening? There are a few possible explanations. The first is macro context. The US has been dealing with a very specific cocktail of bad news in early 2026. Tariff escalations have been ramping up. Tensions with Iran have been making headlines. And US equity markets have been experiencing a broad risk-off rotation, meaning investors across the board are pulling back from risky assets. Stocks are down. Crypto is down. And the news cycle in America has been relentlessly negative. Compare that to Asia or Europe, where Bitcoin's price decline is happening in a different news environment. The macro anxieties hitting US investors hardest aren't landing with the same weight in those markets. Bitcoin holders in Seoul, Singapore, or Berlin are seeing the same price drop, but they're not being bombarded by the same wave of doom and gloom domestic headlines. This explains why US retail is reacting more emotionally. When fear is amplified by the news you're consuming every day, it doesn't just affect your mood, it affects your Google search behavior. So what does all of this data actually mean? The history. What happened the last 2 times this occurred? This is the part I told you not to skip, and I meant it. Because while data is interesting on its own, data in historical context is powerful. And when you look at what happened the last 2 times Bitcoin 0 searches spiked in the United States, the pattern is hard to ignore. Let's go back to 2021 first. Bitcoin had been on an absolute tear in early 2021. It broke $60,000 for the first time. The euphoria was real. Mainstream media was covering it. Celebrities were talking about it. And then it crashed. Hard. Bitcoin dropped from its April 2021 highs by more than 50%, falling back down toward $30,000 by the summer. And right around that time, Bitcoin Zero searches in the US spiked. People were terrified. The narrative shifted overnight from Bitcoin is going to $1 million to Bitcoin is going to zero. Sound familiar? And then what happened? Bitcoin bottomed. And it went on to reach a new all-time high later that same year, topping out above $68,000 in November 2021. The people who searched Bitcoin Zero in fear near that summer 2021 bottom and then sold, they missed one of the biggest recoveries in Bitcoin's history. Now let's look at 2022. This one is even more dramatic. 2022 was genuinely brutal for crypto. The Luna collapse wiped out billions. Celsius went bankrupt. FTX, one of the most trusted exchanges in the world, imploded in spectacular fashion in November 2022. Bitcoin fell from its November 2021 all-time high of $68,000 all the way down to around $16,000. The industry was in ruins. The headlines were apocalyptic. And guess what? Bitcoin Zero searches spiked again. This time, the fear felt more justified than ever. Major companies had gone bankrupt. People had lost real money. Regulators were circling. And yet, that spike in fear searches once again coincided with what turned out to be the bottom of that bear market. Bitcoin went on to rally massively throughout 2023 and into the 2024-2025 bull run, eventually setting that October 2025 all-time high that we've now fallen 50% from. So we have a pattern. Two previous Bitcoin Zero search spikes in the US, both near local price bottoms, and now a third spike, the biggest one ever recorded. But, and this is critical, I'm not going to just tell you this is definitely a bottom signal and send you off to buy Bitcoin. Because there is a very important caveat that changes how we interpret this data in 2026. Remember what I told you earlier about how Google Trends works? It measures relative interest on a 0 to 100 scale. A score of 100 means peak interest for that term relative to itself. Here's the problem. Bitcoin's user base in 2026 is dramatically larger than it was in 2021 or 2022. Bitcoin is genuinely mainstream now. There are Bitcoin ETFs. There are billions of dollars of institutional money in the market. The number of people who own Bitcoin, follow Bitcoin, and casually search for Bitcoin-related terms is orders of magnitude higher than it was 3 years ago. So when Bitcoin Zero hits 100 in February 2026, the 100 is being scored against a much higher baseline of overall Bitcoin search activity. In absolute terms, it's not necessarily true that more people are searching for this term now than in 2022. It might just mean that the spike is proportionally large relative to today's elevated baseline. This is the methodological wrinkle that you almost never hear discussed when people cite this data. And it matters, because it means the raw emotional weight of the signal might be diluted, not because fear is lower, but because the denominator has gotten bigger. Does that mean we throw out the signal entirely? No. Retail fear is clearly elevated. That much is real. But it does mean we should treat this as one data point in a larger picture, not as a guaranteed contrarian buy trigger. And that brings me to part 4, where I give you my actual read on what this all means going forward. What happens next? Kenzo's take. Okay, we've looked at the data, we've looked at the history, we've understood the methodology. Now, let me give you my honest take, the Kenzo Finance perspective on what I think is actually happening and where this goes from here. First, let me acknowledge what's real. Bitcoin is down badly. The macro environment is genuinely challenging. Tariffs, geopolitical risk, equity market weakness, these are real headwinds. The pain that US retail investors are feeling right now is legitimate. This isn't just paper losses for most of them. This is the kind of drawdown that makes people question everything they thought they knew about Bitcoin. And that fear, that real visceral gut punch kind of fear, is exactly what creates bottoms. Let me explain why. Markets bottom when selling is exhausted. And selling becomes exhausted when everyone who wants to sell has already sold. The people typing Bitcoin Zero into Google are not the sophisticated institutional players. They're not the Bitcoin veterans who have been through 3 or 4 bear markets already. They're retail investors, people who probably entered the market during the 2024 or 2025 bull run, people who are now watching their investments in the red for possibly the first time. And historically, that cohort tends to sell at bottoms, not because they're dumb, but because the pain becomes too great and the news cycle becomes too negative. They capitulate, they sell. And then the market turns. The Google Trends data is essentially a proxy for that retail capitulation. When fear searches hit record highs, it often means we're close to maximum retail pain, which tends to coincide with price bottoms. Now, here's the nuance I want to add, because I think this is where a lot of people get the analysis wrong. The US data and the global data are telling us different things, and both matter. The US signal says American retail is panicking at record levels. Historically, that has been a buy signal. The global signal says worldwide fear has already peaked and is declining. That suggests the broader market has already processed a significant portion of its fear. The capitulation, at a global level, may have already happened back in August. So what do you get when you put those two signals together? My read is this. We are likely in the late stages of this correction, not necessarily at the exact bottom. Market timing is a fool's errand, and anyone who tells you they know the exact bottom is lying to you. But in the zone where risk-reward starts to shift favorably for patient, long-term holders, the U.S.-specific fear is likely to fade as macro conditions stabilize, tariff narratives shift, Iran headlines cycle out, equity markets find support, and as those local headwinds ease, the emotional pressure on U.S. retail investors will reduce, and with it, the panic-selling pressure on Bitcoin. The global picture, where fear is already cooled significantly, suggests that the rest of the world's Bitcoin holders are not in the same panic mode. They're watching, they're waiting, and some of them are likely accumulating at these levels. Bitcoin at $60,000 is not the same as Bitcoin at $16,000. The fundamental case for Bitcoin in 2026 is stronger than it has ever been. Spot ETFs have opened the door to trillions in institutional capital. The halving cycle that occurred in 2024 reduced new supply. And global interest in Bitcoin as both a store of value and a geopolitical hedge has never been higher. None of that has changed because the price dropped 50% from its peak. Now, what could I be wrong about? A few things. If the macro environment deteriorates significantly further, if a genuine global recession materializes, if a major crypto-specific crisis emerges, if regulatory crackdowns intensify, then this correction could extend further than the historical pattern suggests. The Google Trends signal is not a guarantee, it's a signal. And signals have failure rates. There's also the question of whether this bull cycle is structurally different from previous ones. Bitcoin's market cap is now much larger. The leverage in the system may be different. Institutional behavior adds a layer of complexity that didn't exist in 2021 or 2022. So while the historical pattern is compelling, applying it mechanically to 2026 carries risk. My honest advice, and this is not financial advice, this is me sharing my thinking publicly on Kenzo Finance, is this. If you're a long-term Bitcoin believer, this is the kind of environment where patient accumulation has historically been rewarded. Not leveraged, all-in bets. Patient, disciplined accumulation over time. Dollar cost averaging. Not trying to catch the exact bottom, but recognizing that, in the larger arc of Bitcoin's history, periods of maximum fear have tended to be periods of maximum opportunity. If you're someone who bought near the top and is now sitting on significant losses, the worst thing you can do is make an emotional decision based on the same fear that's driving those Bitcoin Zero Google searches. Because the people who searched that in 2021 and 2022 and then sold, they didn't just lock in losses. They missed the recovery. The data doesn't guarantee anything. But it does tell us something important. Fear is at record levels in the US. And historically, record fear has not been the end of Bitcoin. It has been the beginning of its next chapter. That's the full breakdown. The data, the history, the methodology, and the honest analysis. I'm Kenzo. This is Kenzo Finance. If this video gave you a new way to think about what's happening in the market right now, drop a comment below. Tell me what you think. Are we at a bottom? Or do you think there's more pain ahead? I want to hear from you. Like this video if you found it valuable. Subscribe if you're not already, because this is the kind of analysis I bring every single week. And share it with someone who's panicking about Bitcoin right now. They might need to hear this. See you in the next one.